It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
For example, Melbourne was one, Melton, which we know is a first home buyer heartland. This was actually the quickest time to save for an entry house in Melbourne. In Brisbane, it was Cleveland. In Sydney, it was up in the Central Coast, so Waiwong. And in Adelaide, it was Playford. In Canberra, it was Molonglo.
And that is Nicola Powell from Domain, and welcome back to another Real Estate Podcast, your largest real estate podcast library in Australia, as we talk to the property experts from the Sunshine Coast to Darwin and every city in between. You can stream us, of course, on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts, and Amazon. And don't forget, if you've got a friend who might be just like you, they are into the real estate market, they might be looking at buying their first property in 2025, let them know about the Real Estate Breakfast, where it is a Thursday morning. I don't know about you, but the working week, it's gone by in a flash so far. So is February, for that matter. February the 27th today. And good morning to you, Jacko in Canberra, a listener who has emailed through. Now, yours is a very interesting story. You're saying that you were ready to pull the trigger, so to speak, and buy a unit and enter the property market on your own. But with the cost of living and concerns about the job market in your industry, you've decided to hold off until the end of the year. You say that by that time, the interest rate would have taken effect, 2 or 3 or 4, with a bit of luck, and your job market space might have improved. And you say that you're going to keep listening in the meantime, and thank you for those kind words as well in your email. That is great that you could share your property journey with us. I've got to say, there is a lot to unpack there. You would have heard me advocating time and time again only to buy when you are ready. Yes, real estate agents will always say the best time to buy is now. However, we're not a real estate company and therefore not in the game of selling properties. So, Jacko, I think you've done the right thing there. Job security in many industries isn't a guarantee. Well, let's face it, in what job do you get these days where you can say, I've got a guaranteed job for the next 2, 3, 4 years? So if it is a little bit shaky, waiting out rather than buying and then potentially losing your job after you've done that and then maybe forced into a sale, that would be a bad result all round. So thank you very much for sharing that with us. Right now, let's welcome in to the Real Estate Breakfast Nicola Powell from Domain, who has been patiently listening to Jacko's dilemma. And what about that, Nicola, from Jacko? He won't be alone, of course. It highlights the cost of living linked with job security playing major factors for not only Jacko, but a lot of first home buyers.
It is definitely a financial challenging time, I think, for anybody looking to get into the property market. And, first of all, congratulations to Jacko that he was, is at that point where he is really planning to make that move. And we know it's such a financial hurdle, and to get to that point of looking for a home and buying and potentially buying it is such a great milestone, I think. And I agree that I do think that it's about timing the purchase when it's right for your own personal circumstances. I think the worst scenario that you could potentially be in is losing your job and then defaulting on those mortgage repayments. And, there's 2 ways to look at affordability. It's not only saving a deposit, but it's also the ongoing repayments that you need to be able to make. And look, we are expecting rate cuts and more rate cuts this year. But overall, he said he was purchasing in Canberra. Canberra is a buyer's market at the moment, and there is lots of supply. Overall choice is 55% higher than the 5-year average in the ACT. So choice is there. And those conditions are probably going to be largely stagnant. We're not expecting prices to rise significantly in Canberra. So I would always lay out every decision needs to be the primary guidance is what is right for you.
Yeah, absolutely. And it kind of nicely segues us into Domain's latest first home buyer report. Now, that has been released this morning, and it reveals that purchasing a unit can shave nearly 2 years off the time needed to buy a home compared to a house. So maybe just sort of set that up a little bit for us this morning, Nicola.
So units do offer a quicker pathway to being able to save that lump sum deposit, and that is of course because prices are much lower in the unit sector compared to houses. And with this first home buyer report, we actually focused in on the entry price point. So that's what's called the 25th percentile, which is much more in line with what a first home buyer is really going to be aiming for financially. And look, across all of our capital cities, and the gaps are slightly different. Purchasing units does supercharge your time to market. Saving that lump sum deposit is the first financial hurdle that a first home buyer needs to get to. And we base this on 20% deposit. You can go lower than that. Then you need to pay things like lender's mortgage insurance. But, as you said, it's almost 2 years shaved off the time it takes to save when you opt for a unit. And in Sydney, it's almost 2.5 years. In some of our other capitals, in Melbourne, 1 year, 8 months, Brisbane, 1 year, 4 months. So it really is supercharging your speed to market. And I think for many, particularly with the tight rental markets that are still in many parts of Australia, first home buyers are really trying to supercharge access to the market.
Yeah, quite interesting, particularly Sydney and just how much time you can save. We'll have a look at Sydney in just a moment, but let's go all the way up to Darwin, which remains the top city for first-time buyers, offering the fastest pathway into home ownership. So perhaps give us the numbers and the breakdown on Darwin this morning.
Yeah, Darwin is the standout performer really for first home buyers. So what we're looking for here is, that affordability balanced with a higher average wage, which I think is helping Darwin really have a lower period of time it needs to take to save for a lump sum deposit. 3 years, 5 months in Darwin to save for an entry house deposit, and 2 years and 1 month to save for an entry unit deposit. But what's even really positive for first home buyers is that time to save has reduced over the last year, and it has reduced over the past 5 years as well for houses.
Yeah, it just makes you wonder what is going to happen, of course, by the time we get to the end of 2025 with these rate cuts that everybody is licking their lips over. And let's have a little bit of a breakdown on the areas with the shortest time to save for a 20% deposit on an entry-priced house. And I think you've got some cities that you can break this down for couples aged between 25 and 34.
Yeah, so what we found is obviously the quickest, or most capital cities, the quickest pathway to entry is in those outer locations, because you tend to find that affordability is much greater in those outer locations. So, for example, Melbourne was one, Melton, which we know is a first home buyer heartland. This was actually the quickest time to save for an entry house in Melbourne. In Brisbane, it was Cleveland. In Sydney, it was up in the Central Coast, so Wyong. Interestingly, in Perth, it was Perth City. So that is the central area, that CBD area of Perth. And in Adelaide, it was Playford. In Canberra, it was Molonglo, Darwin, Lynchfield. But all of these locations had a much lower time to save compared to the overall city figure.
Okay, and before we get to the unit price equivalent, what about central Sydney? What's kind of been happening? I hate to ask in terms of the saving for Sydney.
So Sydney has a very long time to save. It has the longest out of all of our capital cities. So it takes a couple 6 years and 9 months to save for an entry house, and 4 years and 4 months to save for an entry unit. And I think what that really showcases is the extreme nature of the price point of Sydney's housing market. When you look at the entry price for a house, it's now sitting just under $1 million. And let's remember, I really want to emphasize, this is the entry price. So this is the 25th percentile for Sydney, is $990,000 for an entry house. For a unit, it's $615,000. but that is far higher than all of our other capital cities. And that is why there is such a long time it takes to save for that entry level deposit. We have had one cash rate reduction, but overall the cash rate has been higher, and that's been a positive for people saving. So we've in essence had a higher interest being accrued on savings over time. But even that being said, we've still seen the time it takes to save for an entry house increase in Sydney. But interestingly, for units in Sydney only increased in price about 2.5%. So that's only $15,000. And what that means is wage growth and that compounding interest being accrued on savings has meant that the journey time it takes to save for an entry house has reduced over the past year and is down by 15 months compared to 5 years ago. So the outlook for units in Sydney is actually much better relative to entry houses.
Yeah, that is a bit of a surprise, so we'll watch that with a lot of interest. Now, the areas with the shortest time to save for a 20% deposit on an entry-priced unit for, again, a couple aged between 25 and 34. You've got some of the breakdown here.
We do. And look, we do have areas like Darwin overall that has the lowest time it takes to save, but some of those other cities, so Perth is up there as well at 2 years and 11 months. But when we look at some of those areas within the capital cities, so for an entry price unit, the quickest time to market in Sydney is Mount Druitt. In Melbourne, it's Essendon. In Brisbane, it's Springwood, Kingston area. In Perth, it's the city again, so that CBD location. In Adelaide, it's Unley, and in Canberra, it's Woden Valley. So what this really highlights is obviously affordability is very different depending upon the location. And that geography can really dictate how quickly you can edge into the housing market. And one of the things I always say to any first home buyer that is having a chat with me is your first home is not your forever home. And what you need to do is think about building equity, building that savings pool and allowing you to then upsize to your next home. And I think what you need to ensure as well is think about what you want. What is the locations? What are the things that you are willing to compromise on? Is there a bit of wiggle room within the location and vicinity that you're after? Because what you might find if you edge a couple of suburbs over, or you choose a bridesmaid suburb, so that's that type of suburb that hasn't quite seen that rate of growth yet, these are all things that can help you get into the property market sooner.
All right, well, fantastic stuff there, Nicola, and hot off the press as of today. And thanks for sort of running through the numbers and the locations. Enjoy your Thursday.
Thanks so much for having me.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
Look, it's a very common question and it is a myth. So old properties, new properties, you can claim depreciation deductions. So many of the older properties that we have in Australia now have all been through renovations.
Co-investing, as I said, it's becoming increasingly popular among millennials as they seek to share financial responsibilities with friends or partners. How much of that inquiry at the moment are you seeing?
It's on the rise. It's something historically we haven't seen a great deal of. And from a depreciation perspective, when you do go and buy a property with your friend or with a family member, the depreciation deductions will provide two different reports. So one for each of the investors, or if there's more investors that are part of the syndicate that have purchased into that property. So we are seeing an uptake in it and an increase. And with the increase of property prices across the country as well, as a business, we're expecting to see increase as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.